Welcome to the THL FY16 Interim Results Release Update. I'm Grant Webster, the CEO, and I'm going to give you a quick overview of the results for the half and our forecast for the year. We were really pleased with this half to be able to update our full financial year forecast for 2016 to 24 million net profit after tax, up from the previous guidance of 22 million. For the half, our revenue was up 20%, our EBIT was up 42%, and our net profit after tax was up 45%, a very strong start to the year. The tourism businesses were up about 19% in revenue, and EBIT was up about $900,000. In Waitomo, we opened the Waitomo Caves Homestead, which is a new retail, cafe, food and beverage, and ticketing outlet on the edge of Waitomo. Kiwi Experience had a good half as well, and we've actually opened some tenting sites around the country to ensure that we've got enough accommodation for the increased passengers around the year. New Zealand rentals business, we were up nearly $1 million in EBIT, and that was driven off a nearly $5 million increase in revenue. The Australian business EBIT was broadly in line with the prior year. Rental revenue was up 1%, reflecting the lower fleet numbers we had, but higher utilisation. Vehicle sales in Australia were up 18% and benefited from the launch of our own vehicle sales retail site in Melbourne. The USA business, excellent result with a 25% increase in EBIT in United States dollars. That resulted in over a 60% increase when converted to the New Zealand currency. Our joint venture businesses, both Action Manufacturing and our Just Go joint venture business in the UK, both performed within expectations, and Action Manufacturing reduced margins, which actually means we have lower build costs for our fleet within the tourism business. Group support services costs were slightly up for the half, but that's some investment in new initiatives. Initiatives like My Way, our entry into the sharing economy, looking at peer-to-peer rentals. Overall, tourism's really positive in New Zealand at the moment, and indeed worldwide, and we're creating the opportunity to leverage that into the THL business. Shareholders for this half benefited as well with a 9-cent per share dividend. That's up from 7 cents the prior corresponding period and 8 cents for the final dividend last year. THL again is focused on return on funds employed and growth. Part of that growth is looking at acquisitions, and whilst we're looking around the world at the moment, there's nothing that we've got to update at this point in time. I look forward to giving you a further update in August on our full financial year results. Thanks again for investing in THL.